for joining us today. We have a presentation with Condor Gold. CEO Mark Child is here to walk us through the story and answer some questions. As always, this presentation will contain forward-looking statements. You can find those on the presentation on his website. And also, always, there will be a Q&A section at the end. So if you have any questions, feel free to enter them in the Q&A box at the bottom of your screen. And with that out of the way, I'd like to introduce CEO of Condor Gold, Mark Child. Hi, Mark. Thanks for joining us.
Hi, Deborah.
So I believe you're going to do a bit of intro on yourself and then walk us through the Condor story.
Yes, certainly. Yes, I'm actually currently talking to you from a hotel room in Managua, and after this presentation, I've got a car waiting for me, and I'm going up to the La India project. So yes, I'm the CEO. I've been with the company for 10 years on a full-time basis, and taken the project from no mineral resource to a fully permitted project, which is almost shovel ready. And I'll go into that in the presentation. So the first slide we're seeing here is the entrance to La India. We've constructed this road, and you can see an 18-wheeler in the background. We have the engineers, civil engineers, architects to do all the construction of roads and that associated mine site infrastructure. There's our disclaimer. A copy of this will be on our website. In terms of the project, we have a production base case of 100,000 ounces of gold a year with an upside of 150,000 ounces of gold a year. We have a feasibility study due in the first quarter of next year. The open pittable portion of it is 1.12 million ounces from 3 different open pits. It's very high grade and highly economic. Our stage 1 is open pit only production, and stage 2 adds in the underground. We've got strong economics and low capex. On the open pit and underground production, the all-in sustaining cash costs around just over $900 an ounce. On open pit only, we think it's going to be around $800 an ounce. We're pretty undervalued compared with our peer group, about $35 an ounce in the ground, based on current gold prices. Nicaragua is stable from a mining perspective. We get the concessions for 25 years. Gold is the largest export. The tax regime is fair and reasonable, and they haven't changed it in the last 15 years I've been coming to Nicaragua. There are half a dozen Toronto-based companies operating down here, and the infrastructure is pretty good across the country. La India project is low sulfidation epithermal vein system. We're showing you 7 different deposits here, all very close, all within a couple of kilometers of each other, that can all be expanded along strike and down dip. It's a former mining town where it produced over 500,000 ounces at 13 grams, and the mine closed in 1956. We've got all the permits, which I'll come on to. This is the fully permitted pits. The area in magenta is the permitted zones, so all purple. And just starting from the bottom, the biggest pit is called La India open pit. There's 900,000 ounces of mineral resource there. That's indicated and inferred, and the detail at the bottom is just splitting out the indicated and inferred ounces. But the main pit's 93–94% indicated, and the 2 smaller pits have another combined 220,000 ounces in them. Everything is permitted, from the construction of the mill, the tailing storage facility, the explosive magazine. All the mine site infrastructure is permitted on the project. And underneath that, we have another 1 million ounces of underground, so the pits might well push deeper, and getting that permitted is really a foregone conclusion for us. We do need to do more drilling to bring that into a mine plan. We're clearing site. So last week I was on the project for 3 days, and the week before for 4 days. This is my 3rd week in Nicaragua. We've cleared about 5 hectares. We have the forestry permits or deforesting permits, and for every tree we cut down, we are planting 10 new trees. We have a commitment to plant over 200,000 trees on the whole project. So this is now getting very advanced. We put out a PEA. I just want to take a step back to say what the project could do and where we would like it to be. And that's why we put a PEA out, which was filed on CEDAR to 43-101 criteria in last month, October. And this basically says that if we did all the open pit and underground material on this scenario, it would produce 150,000 ounces of gold per annum for a 9-year period. Almost 1.5 million ounces gets produced over the life of mine. The initial capex isn't too high for a project producing this much gold of $160 million, including contingencies and EPCM. One of the reasons that's low is because we actually produce over 150,000 ounces for the first 2 years open pit material and use that cash flow from the open pit material to fund the underground development work. So the underground is self-funded. If you look at the NPVs on the project, and this is a proper NPV of after deducting upfront capital costs for construction, after royalty, after taxes, it's $418 million US dollars versus a market cap of around about 65, 70 million US dollars today. The IRRs are 54%, but attractively, the payback period is only 12 months. All-in sustaining cash costs on this scenario is 583,000. And you can see the underground mill feed and open pit mill feed at the bottom of this particular slide. So these are highly, highly attractive economics. I say these numbers are assuming 1,700 ounce gold, sorry. Today it's about 1,800. We've done other matrix on 1,550 and all the different scenarios are in seed. I'd encourage people, and on our website, I encourage people to look at it. What we're focusing on at the moment is to get this a minimum capex, maximum cash flow, and we're focusing on 9-year open pit, the big pit of 900,000 ounces, to bring that to a bankable feasibility study. Here's a cross section of the main pit, and you can see the grades here are very high. These are top 10 drill results, like 10 meters at 34 grams over an ounce. It's exceptionally high. And also 21 meters at 6.5 grams, very, very near the surface. We did this year much tighter drill spacing to get this, the top part of this pit shovel ready. This is 25 to 25 meter drill spacing. And we've identified within that high grade zones that we could we could mine early. And so we have there about 50,000 ounces, 54,000 ounces on that number that can be produced at over 4 grams. That's all within 35 meters of the surface. So it's just sitting there ready for us to take out. At 1,700, that would give us $60 million of operating profit based on our PFS numbers. And it's only 10% of the pit. We could also toll mill that. We could take it to nearby plants if we were to reach a toll milling agreement. And some great intercepts here, just confirming that a geological model, increasing the confidence for people to lend against the project, and increasing the confidence for us to mine it with contract miners. And you can see that first one there is 21 meters at 6.5 grams, including 15 meters at 8, from only 24 meters drill depth. That's probably about 20 meters beneath the surface. And the other intercept under there is also exceptionally good. Now, those drill rigs were stood down about 3 months ago for this program. The other high-grade pit, we announced last month, we have completed 8,000 meters drilling on Mestizo Pit to the north. This pit has 120,000 ounces at 8 grams. The fully diluted mill feed is about 500,000 ounces at 5.4 grams. We can produce about 80,000 ounces of gold out of it. And the operating profit out of that is $90 million US dollars. And this is within 100 meters of the surface. And we've given the background at the bottom. But why am I highlighting these two starter pits? Because when they're combined, we get grades of about 4.6 grams, 4.7 grams for the first 18 to 18 months of mill feed, either for our plant or for toll milling. And this explains the high grade scenarios. We've added a third pit of Mestiza here. This would give us 24 months, of production at 4.5 grams. This is highly, highly economic and gives a quick payback to the project. The mill we've purchased, assuming we did the first year or two at 4 grams plus, you've got the 100,000 ounce production. That's the last bullet point here. The feasibility study. This has been our main focus for the last 18 months, indeed, apart from putting in 15,000 meters of drilling. But the feasibility study is there to completely de-risk the project and provide bank financing. As of today, and we're doing that feasibility study around a mill that we've purchased, which I'll show you some photos of the parts. And we're trying to keep the capex under $100 million. If it's just one pit, then the all-in sustaining cash costs go up to 900. But in fact, we add other pits in, that'll come down. But still highly, highly economic. The total mill feed is the second bullet point here of 8.3 million tons in the PEA. So if you look online on the documentation, you'll see that the permitted pit, which we're doing the FS on, has 685,000 ounces of gold in it, and it's 94% indicated, and it could produce around 620,000 ounces. The FS is highly advanced. We've completed all the technical studies on the ground. We put out an announcement today saying we completed 2,500 meters of geotech drilling. That's to FS level. That's in addition to 1,500 meters of geotech drilling we did in the pre-feasibility study. That's to give the pit angles for the final mine designs. We've completed the processing plant design, the hydrology, the tailings storage facility, the water retention dam, the metallurgy. We've had the results back from the lab. We're just writing up a report, but the hydrogeology for dewatering, we've just finished on the weekend a pump test of, I think it's the 5th drill hole for dewatering of the pit. That has been signed off or agreed with SRK today, this morning. We have 2 consultants coming down on the week of the 13th of December as QPs regarding the mine schedules. Next week, and also the resource update for this drilling that we've done. We will also have hands-on engineering from Tucson, Arizona coming down next week, just to finalize some things with the processing plant layout. But there's all those studies have been completed. So we're now waiting for information to come back from the labs in terms of rock hardness. And the consultants at SRK and Tierra Group and Hanlon have got to finalize their report writing. And so we're in good shape in terms of the progress of completely de-risking or mainly de-risking this project with a feasibility study. The mill that we purchased, it's now all arrived in Nicaragua, apart from some parts that are in Mexico with First Majestic Silver, who we purchased off. We paid 6 million out of 6.5 million. First Majestic are storing the equipment for free at the moment. They accepted part payment in shares at 50p earlier this year compared to the current share price of 32p, which is obviously encouraging. They think that the shares should be double what they paid for it, they've told me. We're expecting initial production of 100,000 ounces out of the mill. This is great to see it pretty much in country. I just had breakfast with the freight forwarding people in Nicaragua this morning, and they've done a great job getting this in. The mill can be 20% bigger with a slightly bigger motor, but this is all brand new with warranties from Mestizo Pit in Finland. We had an 18-ton bit of equipment arrive, a clear customs actually yesterday from Finland. So that's the last big bit from Finland. The plant layout is completed to FS study. We've got a small video on this, an animated video, which I can show people another time, but that's now completed. Resource expansion. So this is getting into the upside and district. We've just spoken about where the mining area is, which is on about 3 or 4% of our district. We've got 580 square kilometers. And over to the left, you can see the light gray, it's flat, and to the right, you can see it's light gray and flat. And in the middle, you've got this mountain range or hills between 300 and 800 meters above sea level. And this is the plate tectonics in Nicaragua buckling and causing faults. And through those faults come the gold-bearing fluids. And this is what this slide's showing you here. These are the 2 basement feeder zones identified. There's Landia Corridor, major regional faults of Landia Corridor and the Andrea Corridor. And we've used a very symptomatic process of soil geochemistry, airborne geophysics, structural geological modeling, detailed geological mapping, trenching. All that has been given us a very high degree of confidence that we've got 5 million ounces plus on the district. Quick way to add 1 million ounces is to drill down the existing ore shoots of the core zone and expand in the 4 small areas that we've got. This is the southern end of the main pit, and as you can see here, there are 4 drill holes underneath the pit. All of them are over 10 grams. The average width is 8 meters wide, and that's just completely open. It could go on another few hundred meters, and there could be a series of other high-grade ore shoots. The pit to the southern end drops down with a fault, and so where the word is no gold mineralization, that's because it's faulted down 150 meters, but it just means the gold's preserved underneath that. Other parts of the upside is Cacao, and we've drawn in here in navy blue, we've got the permitted zones, which I've showed you before. And this time we're showing you the indicated and inferred material in total, i.e. the total resource, both underground and open pit combined. And over at Cacao, we feel there's another 1 million ounces on Cacao, and there's a preserved epithermal vein system to the south of this highway fault that's marked in red. This is Cacao as a plan view or bird's eye view. The resource of 60,000 ounces over to the left. The sinter boulders on surface show the top of a boiling zone, and there's a strike length of 4 kilometers. We drilled this year a very successful drill program into proving the structure. We doubled the strike length of the gold mineralization at Cacao from 450 meters to over 1,000. It's open actually in both directions, and we've got a true thickness over 1,000 meters of 10 meters wide. So you've got the dilational opening to allow the fluids to come in. This needs a lot more drilling, but it's a very exciting system. It looks like we clipped the top of the system. We've shown one of the intercepts, the better one we got here is 15 meters at 4 grams. So nice wide vein. And as more drilling's done, you'll find you'll get that 10-gram material and high-grade ore shoots, and that will almost certainly be here, but it does require more drilling, but it's been a success. Environmental and social, very important to us. In interest of time, I'm afraid I'm going to have to go through this quickly, but we are spending about $20,000 plus a month up in the local community. We have lots of involvement groups, 8 different ones of different parts of the community. Our flagship project actually is not shown here. We spent $200,000 on a water purification plant. I can tell you the 5-gallon purified water bottles, we're delivering 580 per week into the local communities. So they don't have drinking water or sewage. So that's a big enablement and engagement with the social team, following up with meetings as they deliver water. So there's a shareholder breakdown. The directors own 22% of the company. Just so to wrap up the investment case, where base case is 100,000 ounces. That's what we're doing the FS on, or the mill, and we'll produce that. We're quite confident in the first year or few years of production. We're fully permitted on the project to construct and operate the mine. The underground can be added to get us to 150,000 ounces quite quickly, and we've demonstrated that in the recent technical reports. We've got a district scale of 5 million ounces on here. We've been showing that the path to that district quite clearly. Low all-in sustaining cash costs and a low valuation. Certainly compared to the bigger case, the price to book ratio is about 0.18 and fairly cheap at that. And that concludes the presentation.
Thank you very much, Mark. I am going to actually add one of my colleagues to the panel area, just in case my internet goes out again. I apologize, just as a backup. So the first question I had for you, Mark, is you didn't talk much about the political situation in Nicaragua. Could you maybe provide an update on that?
Yes, certainly. Well, presidential elections were on the 7th of this month. President Ortega was re-elected for the 4th term. Unfortunately, by the West, those elections were deemed to be not free and fair elections, but he has been elected for another 5-year term. There have been additional sanctions targeting individuals in Nicaragua as a function of that, which is a concern, but the sanctions at the individual level, not i.e. people that the US in particular view as not enabling free and fair elections. There weren't the press and the independent people monitoring elections were not permitted into the country. So that's a recent bit of news, and that's had a bit of a negative impact on our share price. It's the only thing I can think does have a negative impact. But the opposite side to that for us is that it's been calm here. We haven't had violence. The elections went off without any violence. The mines are up in the countryside and not in the capital where I am right now. They're operating. They've been unimpeded by anything sort of politically, and the government, despite being the current regime that it has been very supportive of the mining sector, by both Calabar Mining, Mako Mining, who've done a great job and built a mine that produced first gold about 4 or 5 months ago. So the mining sector operates here unimpeded by the politics, and indeed in some ways assisted by the government as a cornerstone of their economic growth.
The government continues to issue exploitation and exploration licenses, it seems. Yes,
it's a mainstay of the economy. And for example, just having the surface rights and the concessions we have, we pay about $450,000 US to the government a year for the privilege of renting those concessions or leasing those concessions. Companies give a 3% royalty to the government off the top in Nicaragua. They're employing several thousand people. They're paying into the national insurance of 22%. The employer pays that in, and there's 30% corporation tax across the country. So yes, no, they're permitting everything. I think with the coronavirus, the tourist arrivals haven't been increasing. Tourism has been, many countries, including Nicaragua, has been really hard hit by the pandemic, and the government, whereas mining can continue unimpeded. Certainly open pit mining can.
I believe gold is now the #1 export from Nicaragua. Is that correct?
Yes, that's correct. Yes.
Okay, for some audience questions, I think you did answer this towards the end of the presentation, but maybe you can just cover it for the audience participant that posed the question. With the feasibility study being just on La India open pit, does any further drilling need to be done on Mestiza, or can we just add that into the mine schedule?
That's a good question. We're waiting for 4,000 meters of drill assay results to come back from Mestiza. So of the 8,000 meter drill program, we've only got half. There's been delays at the lab coming back. The reason for drilling Mestiza was that it was 30% indicated and 70% inferred. And you can only have indicated material into a PFS or an FS study. So we can't technically include it. When we get the assay results back, we'll be redoing the block models, updating them in a resource for that infill drilling, which is 25 meters by 50 meters. And then we'll redo the mine schedules. So certainly by the time the mine's constructed, Mestiza should be shovel ready. Indeed, it's shovel ready at the moment in many ways. We've still got a couple of FS studies to do on, so we have a little bit of geotechnical to do, but because it's 3 miles away and it's a shallow pit, we're not foreseeing any issues on that whatsoever. So I would just add it.
Okay. And just walking through some of the timelines from now until when you could potentially be into construction, could you give us a little bit of what you would estimate the timelines to be? And maybe you can talk a bit about project financing and the timeline for that and how you see that playing out.
Yeah, well, they're all interlinked. Mm-hmm. So we need, the timing on it depends on finance. We've been quite clear on that. And the finance to have any debt, whether it's private equity debt or bank debt or gold loans, it's going to come a lot cheaper if you've done an feasibility study to world-class standards, which is exactly what we're doing. So it reduces your cost of capital to have that study. Anybody lending on a project in mining really wants to see an FS study. If you don't, and you build a mine on a PEA and you do your infill drilling, and guess what, it's not there, and the resource goes down in half, you've got problems with everybody. So we're doing this by the book, the same way mine would go up in Canada to very high standards. And that's taking time and a lot of money. But first of all, we get the FS out. We, in parallel with that, are having discussions with debt providers. And once the FS is out, there's some final designs that need to be done. But we can pretty much, subject to finance, we can start the construction. The base case for the mill foundations can be done. The warehouses, infrastructure, accommodation, and all this can be done. We have a procurement list provided at the same time we got the mill, so everything, the complete package of the mill we have, but we have to buy in the jaw crushers, the belts, the reagents, the tanks. That all has to be bought in. FS's capex numbers are brand new everything under the 43-101 regulations. But there's nothing to stop us saying, look, we'll have a second-hand jaw crusher at a third of the price. It doesn't have to be brand new. And so we're taking that approach on the procurement of the additional equipment that we need. Handle Engineering, who are owned by GRES in Australia, GR Engineering Services, say that if this was in Perth, the construction and everything's on site, it's a very simple bit of engineering. You'd be putting this up in 9 months. And a lot of that construction, if it's overseen, we'd intend to appoint an EPCM manager next year. So we've had meetings with people on that front. So I think realistically, we're looking at financing. I can't give an exact timing, obviously it's subject to markets and so forth, but financing is early half of next year. And then we want to get on with the construction, which is going to be a 12-month to 18-month period, including the procurement.
And you'd expect that financing to be partial debt and partial equity?
Yes, exactly. We want to keep shareholder dilution down to a minimum. We'd also looking at gold loans. We've had discussions and indeed proposals from people on gold loans. We're not looking at putting streams into the project.
Got it. Okay, and what is the expected strip ratio for the starter pit operation? It sounds like you have ore very near surface.
For the main pit in the PEA, the big Landia pit, which is the FS pit, the strip ratio on that is in the public domain, and that's 9:1 to 10:1. The strip ratio on the starter pit is going to be less than that, and on Mestiza it's more than that. We obviously have to get the final resource numbers back before I can give final strip ratios, i.e. the results of that infill drilling. We're still waiting for 4,000 meters, and we'd have to do geotechnical work on that. But the high grade that we got more than pays for the strip ratio, and that's shown in your all-in sustaining cash costs.
Yeah, well, I think if you look at the release that Mako put out recently, you can see that it's not always about strip ratio in terms of cash costs. So talking a bit about the outstanding drilling, do you expect a significant increase in the updated mineral resource estimate, or is it merely converting inferred to indicated?
It's converting inferred to indicated. So it's not resource expansion drilling that we'll be doing on the resource, on the mineral resource update.
Got it. And how much drilling is left on Cacao? And do you think the results may push the total resource over 3 million ounces? I know it's hard to answer a question like that.
On Cacao, we've stood the drill rigs down a couple of months. We have drill programs to put in. We're not planning drilling in the short term. We thought Cacao was a great result, identifying, the geologists are quite convinced there's potential for up to 1 million ounces here. We felt that that wasn't recognized by the market when we put those results out. And so our focus really has to be on the FS and on getting cash flow and production. So that's there as a target. We can start back on Cacao at any time, but we're not planning any additional drilling in the short term.
Okay. And when will the final 3% of land be purchased?
That's not an issue. We've decided that we're in no rush to buy that. Effectively been running the company for the last year or so as if we have 100% of that land. We've had conversations with the government who indicated they'll help us with that land. They have compulsory purchase orders in Nicaragua like elsewhere. So I really, for my mind, for a long time now, we've got 100% of land. It's a non-issue, that 3%. It's not going to stop the project. And it's probably the same person who asks the question, every month, but it's not an issue, the land.
Okay. I hadn't heard that question before, Mark, so my apologies.
That's all right.
That's all I have for audience questions. One thing that I wanted to touch on is one of the knocks that I've heard over the years against Condor is that it's a project that hasn't been advanced. And I think this year you've really proven otherwise. I mean, since you presented at our Central American conference, I think it was in the spring, you've hit a number of milestones and catalysts. And not to beat a dead horse, but maybe you could reiterate what you've accomplished this year, because I think that really is important to understanding the story now and where Condor is positioned. And you could argue with me too, Mark, if I'm wrong in my assessment.
No, I think you're right. I think the project's been around for quite a long time, and we lost momentum. We've had a 4-year delay on the project, over the period. And first of all, we did a public, we tried to do a resettlement that didn't work. We had to go of a community, and then we redesigned the pits, made them 20% smaller, put a barrier in between the community and the pit, and we got all the permits with the blessing of the community. So there was a setback of a couple of years on that, and we got that wrong. Although we were told by the government we could resettle, the community didn't want to. The second thing was Nicaragua 2018, where there was a political setback, as everybody knows, and that meant financing was difficult. So we would really, we'd have to raise money. We got a couple of million pounds in, which sort of keeps the lights on. So we weren't able to progress the project as much as we wanted. Unlike a number of Canadian companies, we haven't had that windfall of getting in $60 million, which is a sort of number I would have loved to have 5 years ago, because it could really motive the project. So it's been a bit hand to mouth, which is restricting as a CEO not to have the capital to do what you want to do operationally, although we believe passionately in the project. In terms of this year, to answer your question, well, we bought a mill this year. We announced that in February, and now we've imported it. So that's a big sign of confidence. We paid 90% for it. It's pretty much 90% in the country. We've completed infill drilling on the main pit for the first 500,000 tons or so at 4 grams, and that's 25 by 25 meter spacing. We need to do that for the first mill feed from the main pit, or whether we toll mill that. We've completed 8,000 meters on Mestiza, that other high grade pit, and again converting inferred to indicated to make it shovel ready, that we can do on that. We've bought more of the land this year. We've gone up from probably 75% up to pretty much all the land. So that's another major de-risk. In terms of site clearance, we've cleared about 5 hectares of land that we own, and I've shown you the photos of that. In terms of the FS, we started that this year, and we've completed all technical studies on the ground, and that takes time. So let's just go through some of those studies. The site-wide water management project, of all water hitting the project, there's a meter of rain that hits the project every year, and that's through rainfall and water coming through. All that management of that water has been completed. The tailings storage facility, which is a $1 million study, is fully designed and completed by Tierra Group in Denver. So that's a big de-risk on the project. The geotechnical drilling for the pit angles, 2,500 meters of additional drilling, that was completed 2 weeks ago. Again, we're waiting for rock hardness to come back from some on the labs, and then the technicians will design the final pit angles. And that's all done with televiewers, optical televiewers, and it's been a big project. We've had 2 rigs doing it. It's very slow. We've had consultants in from Peru to log all that, and SRK have done site visits to QP it and been monitored by them. Hydrological drilling for dewatering of the pit. We've just completed that over the weekend as the 4th hole for dewatering that. So it's de-risk. The processing plant design around the mill we've purchased is completed. What else? The environmental studies and social studies they're complete. We just have to do the report writing for the FS for those. Cacao resource expansion drilling, is it bigger than 60,000 ounces? We've had great success on that. So we put in 3,500 meters on that. And there's a couple of slides I wanted to emphasize on that. So I think that covers, we've also hired the team. So over the last year, we've got mining engineers, which we announced, of Jay Navarro from Oceana Gold, full-time on the project. We've got a new CFO who's joined the project, which is a great hire. We've had civil engineers, architects. The local team there is clearing site and helping to de-risk everything. And we keep up. We've done water projects socially. We spent $200,000 on water. So the community relations are cordial and very positive at the moment. And we have to maintain a social license to operate, not just gain it. It's all about maintaining it and improving it. So the project's come on leaps and bounds, and a little frustrating that we don't appear to get much recognition for that, as we've done PEAs just to highlight the project economics, filed those last month. Open pit, how many projects are out there almost shovel ready, fully permitted, 150,000 ounces of gold per annum for 9 years with a 12-month payback, super high grades and economics. So yes, the project's in operationally on the ground. Project's never been in great shape. And then we get media noise and political noise about Nicaragua. That's just a frontier market risk. But actually being here for 3 weeks, we can operate here.
Well, congrats. You've been incredibly busy over the past year.
Yes, indeed. Yeah, it doesn't happen by accident, I can assure you.
So I do have a few more audience questions that maybe we can run through and then wrap up. So has there been any update regarding toll milling? Is that still a viable option, or is it preferable at this stage to keep the ore and process it once the mine is built?
At a personal level, and pausing to think how best to answer it, at a personal level, I think that a toll milling would be excellent for the company. And I would very much welcome the opportunity of entering into a toll milling agreement. Prior to entering a toll milling agreement, we had to do this infill drilling. Whether we put it through our own mill or we put it through someone else's mill, you had to drill out to 25-meter spacing and do the geotech and do these technical studies. So we can be sure the gold's there, basically. We have recently requoted numbers for contract mining, contract explosives, and trucking. We have detailed models internally as to what a toll milling agreement would look like, and it's something that we would be keen to do. That, however, does take the other side to want to do a toll milling agreement. And there are mines in Nicaragua, particularly in the public domain. You can know that La Libertad mine has 50% spare capacity, and they have a hub and spoke policy where they're trucking into a big mine of 6,000 tons a day capacity, 1,000 tons from El Limón and 1,000 tons from the Pavon project, and they're looking at Eastern Borossi. So in some ways, the Landia project would be an additional part of that hub and spoke strategy. For commercial reasons, I don't want to provide more information as to any status of toll milling with Calibre, and that's commercially sensitive. I would just say that it's something that we would like to do as a company.
I think that's an adequate answer. The last question I had was another one around the financing, which is another one that's really difficult to answer. I guess the crux of it is, do you expect to raise equity in the near term before doing project financing? I know you just raised £4 million.
I don't think many CEOs are going to say we're about to go and do a placement or something. We're not, for obvious reasons. We'll look at all types of financing. We've got very supportive shareholders. All the directors, well, 4 directors subscribed to the last placement. Jim Mellon and myself have 22% of the company. I can't give a direct answer to that. I think part of the decision on that depends on how long it would take before the debt financing was secured. You know, is that something that gets secured in January or February, or is that something that takes a lot longer to secure? Now, is that 6 months out, or is it 2 months out? And that'll, depending on that, you will obviously line in whether additional equity is needed prior to the overall project financing package.
Got it. I know that's one that's always difficult to answer. I don't see any other questions, but I guess instead of just leaving it on that note, maybe we can leave it on, you discussed some of the upcoming catalysts. Maybe you can reiterate some of those for shareholders to know what's coming in terms of news pipeline.
Yeah, in terms of the news pipeline, we look to get the balance of the mill in. So that's another de-risk for us. We've got a feasibility study coming out in Q1 of next year, and all the technical side's been done, so that's on track. We have got 4,000 meters of drill results to come back in on Mestiza, so we will release those. Those will be the main parts over the next sort of couple of months. And we'll just continue to do what we're doing and de-risk the project and make it shovel ready.
I think you have done an excellent job of de-risking the project and also marketing more and trying to get the story out. It's been a frustrating year, I think, for a lot of explorers and developers, but I have seen an increased effort on Condor's part to definitely get the message out, especially to the North American audience. So I do appreciate all the work that you've done, and I think it's an interesting story. Is there anything that you wanted to discuss today that we didn't cover?
I think we've covered everything. Thank you.
Perfect. Well, thank you so much for your time, Mark. Thanks to all the audience participants. If you have any additional questions, feel free to reach out and I'll get those answered for you. And yeah, thanks everyone for your time.